Good afternoon. Thank you for taking time today to listen to Zefiro's earnings call for the second fiscal quarter of 2026. Before we begin, I'd like to remind everyone that today's call will include forward-looking statements within the meaning of applicable Canadian and U.S. securities laws. These statements reflect Zefiro's current expectations, estimates, projections, beliefs, and assumptions as of the date of this call. Words such as anticipate, expect, intend, plan, believe, estimate, may, will, should, could, continue, forecast, potential, target, goal, and similar expressions are intended to identify these forward-looking statements. Forward-looking statements in today's call may cover, but are not limited to, our strategic initiatives, business plans, regulatory environment, growth prospects, financial performance, operational outlook, project timing and scope, market conditions, funding and capital requirements, partnerships, carbon credit sales, and other business developments. These statements are not guarantees of future performance. Actual results may differ materially due to risks, uncertainties, and other factors, many of which are beyond our control. Such risks include, but are not limited to, fluctuations in pricing related to our services, changes in regulation and political environments, operational and financing risks, project execution delays, reliance on third parties, competition, and broader economic conditions. For a full discussion of these risks and assumptions, we encourage you to review Zefiro's filings on SEDAR+, including our most recent annual information form and MD&A. Zefiro does not expect to update these forward-looking statements except as required by law, and we remind listeners to view them with appropriate caution and not to place undue reliance on such statements. Finally, this call is for informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities of Zefiro Methane Corp.
Hello, everyone, and thank you for joining Zefiro Methane Corp's earnings call for the second fiscal quarter of 2026. My name is Catherine Flax, CEO of Zefiro, and I'm joined today by our Chief Financial Officer, Michael Downs, as well as Luke Plants, Chief Executive Officer of our subsidiary, Plants & Goodwin. I'd like to begin by once again expressing my sincere gratitude to our entire team at both Zefiro and Plants & Goodwin, as well as to our investors for their continued dedication, trust, and support. Building on the strong performance of our last quarter, the team has remained focused and resilient in this quarter. Today, we will highlight how we are carrying that momentum forward, where we stand now, and the opportunities ahead as we continue to execute on our strategy. Zefiro continues to operate with a clear sense of purpose, focused on delivering safe, efficient, and environmentally responsible solutions that meet the evolving demands of the energy and infrastructure markets. During the quarter, our priorities remained centered on improving financial performance while executing initiatives that support the energy transition and create long-term value for all stakeholders. Over the past 2 quarters, I've spoken consistently about how Zefiro's focus is and continues to be on Plants & Goodwin as the core of our operations. Despite operating through a historically challenging period driven by seasonality, the team not only navigated these conditions effectively, but delivered one of the strongest quarters in the company's history. While growing and strengthening our core business, Plants & Goodwin remains our primary focus. That said, we are equally encouraged by the progress we continue to make in the carbon credit market. That segment has performed in line with, and in many ways exceeded, the team's expectations, and we've continued to sell carbon credits to several external parties. This reflects our disciplined execution and our ability to advance complementary initiatives while keeping our core operations front and center. Last quarter, the company was awarded a major contract in Louisiana, and I'm pleased to share that the project is now fully underway and progressing smoothly. Early execution has been strong, and the team is performing well in the field, reinforcing our confidence in both the project's successful completion and our ability to continue to expanding our presence in the region. We're also proud to have successfully completed a $1.5 million infrastructure project near Pittsburgh. The project finished on schedule, and the team did an outstanding job, demonstrating the depth of our operational expertise and our ability to deliver results consistently. Another area where we made meaningful progress this quarter was balance sheet improvement. During the quarter, we completed debt settlement agreements with two creditors, eliminating approximately 410,000 Canadian dollars in liabilities from our books and securing the forgiveness of an additional approximately 100,000 Canadian dollars in outstanding debt. In addition, we also removed a large amount of high interest debt that was due in 2026, which our CFO, Michael Downs, will give more information on, along with our financial performance.
Thank you, Catherine. Since taking the helm of this past June, we have focused on simplifying the business and strengthening our financial position. Through careful expense management and a bottom-up approach to planning, we've achieved meaningful improvements in performance across the company. Before diving into the numbers, I want to take a moment to recognize the incredible dedication and hard work of the entire Zefiro and Plants & Goodwin team this past quarter. Their focus, commitment, and execution are what made these results possible. I am pleased to report that for the most recent 3-month period, Zefiro delivered approximately $10,100,000 in revenue and generated over $1,100,000 in positive adjusted EBITDA, reflecting strong execution across both operational initiatives and financial management. When viewed in the context of the first 6 months of the fiscal year, these results underscore a meaningful shift in the company's trajectory. For the 6-month period, revenue totaled approximately $22,200,000, an increase of nearly $4,700,000 compared to the prior year, while adjusted EBITDA reached approximately $3,800,000, representing an improvement of almost $6,300,000. In addition, we have achieved meaningful year-over-year reductions in operating expenses, demonstrating our continued focus on efficiency, and have paid down high-interest debt due in 2026 to further strengthen our balance sheet. I want to address the high-interest debt that Catherine briefly mentioned. The company worked closely with 3 creditors related to a $2,480,000 promissory note due in 2026 to exercise a total of 10,790,000 common equity warrants that were originally issued in May 2025. 75% of the exercise price was applied directly to reduce the outstanding secured loan, while the remaining 25% was equitized, generating $447,500 in cash for the company. We used this free cash flow to pay down additional debt due on March 1st, 2026. This total debt reduction from the transaction was approximately $2,300,000, which was a critical step in strengthening our balance sheet, which will give us additional financial flexibility as we move forward. Effective expense management is a critical driver of long-term success for our business, and I'm proud to report that this quarter we achieved a roughly 30% reduction in operating expenses year over year. This significant improvement reflects the current management team's disciplined approach, including target cuts across general and administrative expenses, all while continuing to invest in strategic priorities. I'll now highlight the key areas that contributed most to this decrease. G&A expenses declined 71%. Share-based compensation decreased 61%. Consulting and management fees decreased 46%. Salaries and benefits reduced by approximately 20%. The results I've spoken about represent a clear turning point for the company. I would like to reaffirm that over the first 6 months of the fiscal year, we have generated approximately $22,200,000 in revenue, an increase of nearly $4,700,000 year over year, while gross profit expanded to approximately $8,100,000, up more than $4,200,000 year over year. That improvement flowed through to the bottom line with adjusted EBITDA of approximately $3,800,000, representing an improvement of nearly $6,300,000 $300,000 when compared to the same period last year, and a return to positive net income of approximately $300,000, an increase of roughly $6,400,000 year over year. Taken together, these results reflect strong execution, disciplined cost management, and the progress we've made in the building a more durable and financially sound business. We believe these results over the last 6 months are reflective of the alignment of the Zefiro management team. Our objectives continue to be driving free cash flow, strengthening the balance sheet, and growing the operations pipeline. This is exactly what was done in the past quarter, and we will continue going forward. With that, I will turn it over to Luke Plants, CEO of Plants & Goodwin.
Thanks, Mike. As my colleagues have already mentioned, we've seen a lot of positive momentum over the last several months, which is encouraging considering that the period from November to February is routinely our slowest period from a revenue perspective. This is due for multiple reasons. There's holiday shutdowns, limited hours of daylight during this time of year. Our customers' annual decommissioning budgets are being reset over this period, and there's obvious issues with operating heavy equipment in below freezing temperatures. So you may be asking, well, what's different this time around? And to me, the answer is simple. Management has committed to a laser-like focus on building a first-of-its-kind environmental services business for the oil and gas industry. Our name has become associated with highly technical abandonment work in highly sensitive areas. And there's little doubt in my mind that it's this focus that has allowed us to win our first project, as Catherine mentioned, in Louisiana over the local incumbents. We see additional avenues of expansion like this one on the horizon as well. Additionally, we broke ground in December on our second largest orphan well project to date in Wood County, Ohio. Unlike the traditional low bid fixed fee contracts that are typical of these orphan well programs, this project is being paid on a time and materials basis, which is greatly helping combat the margin compression that you would typically see during this time of the year. And I think maybe most encouragingly, this model is already being replicated in states with the heaviest orphan well inventories, like Pennsylvania and Texas, for instance. Given these trends, it's reasonable to believe that these quarterly results may indicate that this is a new normal for our business. Finally, it wouldn't be fair to not highlight the achievements of our methane emissions quantifications teams on our $1.3 million project in West Virginia that's funded through the Methane Emissions Reduction Program under DOE. Now, outside of Zefiro's carbon credit generation, this is our first project that's actually allowed us to demonstrate our experience in methane detection and quantification while also getting paid to do so. And while the top line figure may not be as significant as some of our P&A projects, we've been extremely encouraged by the margins we've realized on this work, and we view this as a stepping stone to much larger, highly profitable programs going forward. If you would have asked me a year ago if I thought any of this would be possible, I might have laughed. However, under Catherine and Mike's leadership, this company has performed a 180 pivot into a sensible, no-nonsense approach of investing resources into opportunities that actually yield clearest and best ROI. It's truly remarkable what a bit of vision, grit, and common sense can do for a company, even in a 6-month time frame. So with all that being said, I'd now like to hand it over to Catherine to wrap up our call this morning.
Thank you very much, Luke. Under the current management team, Zefiro has shifted to a results-driven, execution-focused approach. We've stabilized and strengthened the core business, expanded our reach across both public and private markets, and taken decisive steps to improve our financial health, as both Mike and Luke have indicated. At the same time, we remain firmly committed to responsible operations and creating durable, long-term value for our stakeholders. I want to thank you all for taking time today to listen to our call. As you can tell from our comments, we're excited about the business outlook. I'd be happy to address additional questions or set up one-on-one meetings with anyone interested in following up on today's call. Please reach out to investor@zefiromethane.com with any questions, and we really look forward to hearing from you. Thanks very much.